Hi guys, and welcome to my YouTube channel. My name is Zwannda, and in this channel we talk about all things personal finance, investing, saving, money management, interest rates, the likes. Yes, so if you feel like this is your cup of tea, please make sure you subscribe and ring that bell so that you get notified every time I post a video. So guys, I really appreciate the support that you guys have been giving me. I am on the road to 5,000 subscribers. Yay! And I'm hoping to get to 5,000 before the end of the year. And this could only happen if you guys are subscribing. So if you're a new viewer and you are watching and you have subscribed, please give me a thumbs up on the comment section. I really appreciate the engagement. Also, I have not forgotten those who are returning viewers. I really appreciate you guys, and I like those who are commenting very, very much. So I love you guys. So let's get into the topic of the day. Today I want to talk about why I do not focus on dividends paying companies when I invest on the stock market. I'm sure this is gonna raise some eyebrows. Jesus, eyebrows, because people love dividends, and why not focus on dividends, right? So I'll be elaborating from my standpoint why I don't focus on dividends. And guys, people love dividends, and me, I love dividends as well. Every dividends I have received, I've screenshotted it and I've posted it. And it's not just me. I think there is a culture in the EasyEquities community that when you get dividends, you screenshot and you post it as an investor, and it makes sense, right? You're celebrating your investment journey, and there's nothing wrong with that. However, that seems to give pressure to new investors. They tend to think that dividends paying companies are the way, right? So I've gotten a question a lot of, Zwannda, how can I search for dividends paying companies, or how can I search for dividends paying ETFs, right? Because they also want to get paid, and they also want to celebrate and screenshot and post, right? However, is that a good way of investing or starting an investment journey? I'm not sure, but for me, the dividends paying strategy does not work. Okay, so before we can continue, I just want to highlight what dividends is in case you do not know. Dividends is actually the payout that companies make to shareholders once they've made profit, in simple terms. Okay, so people who focus on dividends paying strategy are those who look for companies mostly that pays dividends, and they focus on buying those companies or those ETFs. So how it works is that you kind of know that, okay, Citrix ETF pays dividends 4 times a year, and then they pay on average of 60 cents, or they pay an average per quarter. I'm sorry about the dog. They pay on average per quarter maybe 1,000 rand. Let's be optimistic, 1,000 rand. And then you know that, okay, times 4, it's 4,000. That's good money. Okay, so that's how you actually estimate or work through your dividends paying strategy. You kind of estimate how much you will get throughout the year, or at the end of the year, by estimating the dividends that you will get, of course matching that with the shares which you buy. Okay, so this strategy does not work for me. So I am not going out there and looking for companies that pays dividends. I want a good balance of a company that pays dividends, but at the same time a company that is growing, because for me, I'm looking for capital gain. I would call myself a moderate to aggressive investor because I'm looking for real growth, and dividends paying strategy for me, it's slow considering the amount of shares I'm willing to pay. Okay, let's get into the numbers. I've picked one ETF and 2 companies that you guys know very well, or the most popular one, so that you understand my perspective looking at the numbers. For an example, let's start with the Citrix Top 40 ETF, right? So Citrix Top 40 ETF paid dividends of 0.58 per ETF. Guys, descend. So if you see someone posting ETF dividends, just know the most they can get per ETF is less than 5 rand. And of course, there could be outliers, but not that I'm aware of, right? So they paid 0.58, and this one pays, right? They paid about 0.58 per ETF. So I hold 102 ETFs on top 40. So multiplying the 0.58 by 102, that will give you 240. that will give you 60 rand, 60 rand. And then it pays dividends 4 times a year. So assuming that they will declare similar amount every quarter, then I will get 240 per annum, right? So 240 per annum, to be honest, for me, that's slow. It's really, really slow. If I wanted 240, I'll really go and save my money at the bank. So I'm really looking for some real growth. So you would be asking yourself, Zwannda, then what do I have to do for me to get dividends of maybe at least 1,000 per annum? That's, let's start there, at least 1,000 per annum. So if you're investing on the top 40, Cetrix top 40, and maybe assuming the 0.58 dividends declaration, you would need to buy 408 shares for you to get paid 1,000 rand per annum, and that would mean that at least they give them a 250 per quarter, right? So that 408 shares, then of course you will multiply by the 0.58 cents, and then you will get to realize that, okay, this is how much you need, how many shares you need. So what is the value in terms of monetary value of this 408 shares that you need to buy to get at least 1,000 dividends per annum on the top 40 asset tricks? You need to buy shares equivalent to 25,700. So personally, for me, I do not have money to buy one share for 25,000 at this point in time. And currently my portfolio, it's about 130,000. And on the tax-free savings account, I have about 60,000. So there is no way that I'm taking 25,000 and I put it on one share just so I can get dividends, 1,000 per year, 1,000. So I'm not really, that's why I'm not focusing on this. And not to discourage people who are actually doing it, because some people have enough money to buy this amount for one ETF, and then they can get that 1,000 and still hope that it grows. And then they can get another additional income within the same ETF, right? So when I approach this, I'm looking for a company that has at least positive outlook for the future. It's a company that will show me growth. And I think I am a moderate to aggressive investor. So I'm looking for, real growth in the market. And I'm young, relatively. I'm relatively young. So I think, I have time in the market. If I lose money, I will still get a chance to recover it. That's why I'm going all in. I'm looking into companies that will show growth. Okay, let me give you an example with some more positive companies which really paid me really good dividends that I was happy with, right? So Thungela, and I know you guys like Thungela, and it's really doing the things. So Thungela yielded 6.49% on dividends, and those dividends was paid around May, and it was about 18 rand per share. That's a lot. This is the highest that I've gotten dividends for. So I own 82 shares for dividends for Thungela, 82 shares. So it's just multiplying 82 shares by 18 rand. I think that's like 1.5, right? So I got 1.5 in May for dividends. This is the highest I've gotten. Okay, so I spent 9,400 for me to get those 82 shares. And the capital gain, which is the growth that I've gotten, it's 12,000 rand, guys. Like, this is the kind of investment I want. I want a company that will give me good capital gain and at least like some real dividends as well, because 1,500 it's good enough. But we don't know if this is going to be paid quarterly or annually. Yazi, it could be just the only dividends that we get this year, and I think that's why for me dividends paying investment is not really convincing. So if I knew that I would be getting this quarterly, at least I will know that I have 4k in my pocket, right? Of which currently is not the case, right? So another company, it's Capitec paid good dividends in 2022, and I like them for that. They paid 39.4 rands per dividends. There was a special dividends there of about 15 rand. So that means real dividends was about 24 rand, right? And a special dividends to 39. However, Capitec shares are selling at 2,000 rand, guys. Of course, estimating, averaging it out because it varies depending on what's happening in the market. But Capitec is it's at about 2,000 rand. So that means for you to be owning one share, you need to have bought shares worth of 2,000 rand. And for you will be getting against that one share 39 rand. So overall, I got shares of 40, 80, 120, 160. I got 160 for Capitec. And 160, guys, no, that's not what I want. However, in terms of capital gains, at least I spent 7,000 to buy those 4 shares, and my capital gain at least is at 2,000 rand. It's a realistic, it's a good growth in terms of looking at it from a percentage standpoint, right? So that's just me trying to explain why I'm not focusing on dividends, because for me to grow, it will take forever. If I'm only focusing on companies that don't have capital gains and they only pay dividends, it will take me forever to get to where I want to go. So this is my story about capital gains and dividends and why I am not investing on capital gains. If you made it towards the end and you stood and tried to, I don't know what I'm trying to say, but anyway, thank you guys for watching, and give me flowers in the comment section if you watched towards the end. Okay, goodbye. Happy investing.